Now, I'm not saying I've never done it. I'm not saying that we don't have members that do it. I'm saying if you're going to do it, you have to be very, very diligent about it. And so the simple answer to the question is, if I just had to give one answer, I would say, what's up, guys? Welcome back to another episode of the Vacation Rental Revolution podcast. I'm your host, Shawn Moore. We're back with Whiskey Wednesday with my main man, Dave Svolich.
What's up, my man?
What's up, buddy?
I'm just making sure I'm not sure I'm hearing the...
You're not hearing it in your headphones?
There we go.
Okay, okay. You hear me now?
Oh, that's loud.
All right, you got the...
It was
old Jake turned up the volume on the headphones.
Yeah.
Nice.
Okay, I'm good now.
Okay, all right. So we'll, guys, appreciate you joining us. This is Whiskey Wednesday episode, which means we're going to go through some topics, some things going on in our world, so maybe some current event topics. I told these guys I kind of want to just dive into the questions that you guys send in. There's not a lot of topics today, but I think you have a few on the agenda we'll talk about. So we'll still answer some go through some topics, our opinions on them. What's going on in the world, kind of the crazy world, sometimes the fun world. So I don't know what's on the agenda today, but my favorite part is answering your questions. So as a reminder, send in your questions to support@odyssey.com or post them in the comments on whatever platform you're watching or listening on, and we'll make sure that we bring them up on an upcoming episode of Whiskey Wednesday so that you can walk into this game with your eyes wide open and get our opinion on what you should or shouldn't do as you're navigating all these decisions in the short-term rental world. So what do we got today?
Well, first, we had an amazing podcast last week with Larry Fleet.
Oh, Larry Fleet. And you guys all went
to the concert.
Yeah.
Oh, it was awesome.
Yeah.
He's awesome. He really is just a down-to-earth, blue-collar, like just connected with the crowd. It was just super intimate,
small venue
situation.
Yeah.
I mean, it was awesome. And he's just great. He sounds great live. And it was just fun to go. And man, we appreciate him getting us tickets. And we got to skip there was like a line that was about a block long, and we got to skip that and kind of go through the VIP access. And anyways, it was really
That's
good.
awesome. That looked fun. You sent me some pictures.
Yeah.
I mean, we're huge fans, and he was great to be on the podcast. Good conversation, and yeah, we were sad to miss that one. In fact, Wyatt was even telling me maybe we should miss basketball and go to that.
I know. It was awesome.
Yeah. Now I wish you would have.
I know. Yeah. Speaking of, we were at the concert. You were playing basketball. It didn't turn out.
Wyatt broke his kneecap.
I know.
Yeah, in the first game, and so we had a tournament up in Idaho, and broke his kneecap first game in, and played the rest of the game on it. And the doctor told us today, when they x-rayed it, and he said, I can't believe you didn't go down. Second, I can't believe your dad made you play the rest of the time. So he's like, give your dad some crap.
Wyatt was like,
he's like, I can't believe you were able to walk on that
my
thing.
My dad, he doesn't mess around with injuries. Like, you better play, unless you can't walk.
Rub a little dirt on it and you better go. Hey, we just got done watching guys at the PBR, and we say how tough those guys are. Like, you can't, I think he took that a little bit too much to heart, but it was kind of nice to see him like tough it out. But the doctor said it might have made it a little bit worse. So he's kind of teetered on surgery with it, so we'll see what happens.
Well, we wish the best.
It's a little displaced.
There's nothing good about kids and injuries, and I hate to see.
It's just sports.
But it's part of sports.
It's part of sports.
I know it is.
Sophie got she's back in action, but a year or so ago she went through an ACL tear, and it was just surgery and a 9-month recovery back, and it's just tough. Tough watching them go through that, but it's part of life, part of sports, and you deal with it, right?
Gosh, yeah, it stinks, but.
Yeah.
Anyways, well, that was good. We also just kind of talking about, kind of us and so forth. Friday, we had our workshop, Boardroom HQ workshop.
Yeah.
Another sold out event.
Yep.
It was awesome. We had, I think, 16 or so people in here at our office, and we talked all things design and creating an amazing experience and for our guests. And I mean, I think it was amazing. It was good for the folks to come in and spend the day with us.
Yeah.
We had our expert designers and our photographers here. And it was just a full day of really diving into exactly that. And, it was awesome.
I love those events, and I wish we need to get a bigger boardroom because we keep selling them out. Which I mean, we can only have 16 people, so they're very small, intimate events. They're very workshop based, where you're coming in to solve a specific problem. That one was based on telling the story, designing the experience, and how do you go about that? Everybody talks about this stuff, right? Everybody out there talks about it. One thing that we pride ourselves on is executing on it, right? We've got we've got our Wall of Fame with our 1% Club Wall of Fame, and lots and lots of properties that have executed really, really well. And so we bring people in and walk them through our process of really how to tell that story set up the experience, because we're in the experience business and it's way harder to do. We were talking a lot about this with that group and our photographer, our designer, and these other investors, and saying, how long of a runway do we think we have? Because there's a lot of stuff we do, and then immediately, people pick up on it and they realize, success leaves clues, and we want that. We want people, like we have these podcasts. We say, hey, listen, we want you to walk into this with your eyes wide open. Success leaves clues. We post pictures of these properties so people can reverse engineer the process. Executing on this part of the process, while it seems really easy to talk about, it is not that easy to execute, right? It's a very simple concept that you talk about, but it's a lot harder to execute than people realize. And the devil is in the details in really creating and curating these amazing experiences. And I think we're going to have a long runway with that. And so it's one of those things that we feel like is kind of the secret sauce. And it's not really a secret. It's just very few people have executed on it as much and as many times as we have. And it's these minor tweaks, like the way that we're bringing these properties to life and telling the story and choosing our target audiences and really niching down. It's a pretty, most people are just not willing to do it, right? They're just not willing to, take the chance that that's what's going to work. And so they just kind of do what everybody else does, and they just blend into the crowd. Yeah. And so it's, that's probably one of my favorite workshops that we've done, just because I know what a huge lift, and we always show examples of members' properties before and after, and numbers before and after. We had one of our members who we just went through this process with, and it was an existing short-term rental, never made more than $75,000. And the realtor and everybody trying to sell this property said, oh, it's got the potential for $105,000. We just closed out the first year on that property. It was $230,000 in gross revenue. And like, people don't even have a clue that this is actually the lift. And some of our members were asking, why don't we show that stuff more on the front end? Mm-hmm. And I was explaining to them that, because we hear that all the time. Our marketing guys say that to us. You and I have these conversations a lot of, why aren't we showing those numbers are really, really impressive. And we've got hundreds of stories like that. But part of it is, I want people that are willing to put in the work to do that, right? Because like I said, it's difficult to execute on that stuff. And there's a lot of details you have to have dialed in to execute to get those types of numbers. And when we sell, we don't sell the easy button of Odyssey. We sell that it's going to be work, and it's going to take a lot of time, and it's going to, we attract the people that are willing to put the time and the effort and the grit into it. And that grit and determination shows up in how they execute and how they walk through this process with us. And we want to make sure that they accelerate their progress and don't have to figure this out on their own. But at the same time we can't do it for them. And so we're going to put our arm around them and walk down the road together. And we attract those types of people inside of Odyssey. And it's why we have like 80 or 90 markets that we have the number one property in the market in the US. And we've got hundreds of members operating in the top 5% of the markets. Right. And so really executing on that is really, really fun. And seeing the results, like the results are there. Property that's never made more than $75,000 first year out after going through that process. And the big part of the process is designing the experience, telling the story, right? Being able to attract the right customer, convert them, retain them, all those different things that we talk about on a regular basis. Everybody talks about. You plug in the Odyssey system, 9-step process on ChatGPT, it'll spit out our entire system. That's not, the system's the system. We can talk about it all day long. Everybody talks about it. But why is it that we have how many dozens of coaches that are out there that jump into our group or call us up? 90% of the top coaches out there have called me up on one part of the process or more, whether it's underwriting their deal, trying to set up an experience, how we market and do direct bookings. And I never call them out. Like, this is as much as I call them out is a group, and nobody knows who I'm talking about. But there's a lot of them. Why do they do that? Because they talk about all these steps, all these processes. They don't know how to execute. And it's those workshops are really fun because we really dive into the execution with a small group and dive into it. So didn't mean to go off on that tangent, but I think it's, I love those. I have a lot of fun, meeting people face to face, even and we do them. Like I said, we always think you and I talk, should we go to a hotel and have 50 people there, which we've done in the past. And we've had a couple hundred people at events when we used to do our Odyssey live events. And, we've been to those big events, but when you can dial in to our boardroom, our headquarters here, and just get into a 16 table boardroom and spend a day with somebody, sorry, And then, it's pretty powerful. And they walk away saying, holy crap, we're coming back to the next one.
Yeah.
And then they're sold out. So it's hard.
I know. Well, and it's good too. And it's, there's so much information that it's almost sometimes hard to get into all of it within that, 1 day period. And so that's why we're going to repeat them. We're going to start doing the second round as the year goes on. And so for those who, came to one of them or got sold out, and we're going to continue to keep posting those, and they're awesome. So we're already sold out for March.
March is all about marketing, direct bookings. We're going to build the direct booking flywheel. And and then we've got a tax one coming up. We've got a winning mindset coming up, and
self-management,
the dark side of winning. Self-management's coming up soon. Yeah. So
good. Yeah. So those are awesome. So we haven't talked about Trump for a couple of weeks. So I mean, we might as well bring that up for a second.
What part?
Not too controversial, but it's kind of interesting that Trump's come out recently and said, "Hey, if you guys want to jump to the top of the line to become a citizen of the United States, we can do that. It's going to cost you $5 million."
Yeah.
And he was taking a little heat from it, and it's kind of interesting because there are a lot of countries that are doing this. So this isn't just like, Trump decides to hey, by the way, it's going to cost you $5 million if you want to become citizens of the United States. It's like there are a ton of countries that are doing this for a little bit less, a little bit more. So it's not a bad idea. One, it brings revenue to our country, but it also is bringing people in that have money and that are going to most likely spend money, and it'll increase their wealth as well as, participating in our economy. So I don't know. It's kind of an interesting, I think he kind of got Ryan to the deal because, a lot of people need to know that this is happening in a lot of different countries. We probably should have been doing it sooner.
Yeah, maybe. I don't know a lot about it. You were telling me that. You were telling me a lot of people are doing it outside of the U.S.
Yeah.
And, companies do it all the time. We have, they sell different types of seats. You can buy, your VIP passes and everything else. So it's done across the board with companies. He's a business guy, so it doesn't surprise me that came to his mind, and then maybe other countries that are doing it. So
I was
fast track to the front of the line.
When I was at the concert, I got fast tracked.
And it's nice, right? We had Larry Fleet on the podcast, so you can get the VIP treatment at the concert. Yeah, it happens everywhere. So I don't know why people are that upset. I
know. I guess it is what it is. Yeah.
I mean, even I don't know a lot about
Indonesia and all these other countries, or New Zealand and Hong Kong is a big one. Everybody's participating in this. If you want to come to our country, you got to.
We have a VIP line. There's VIP lines in every business event you've ever gone to. So maybe it's just like that, right?
Yeah. So then the only other thing, we could dive into this for hours, but Zelensky, the event that they had didn't turn out like the meeting wasn't quite everybody was hoping. It's a little more controversial and a little aggressive than, and you and I talked about this morning. I'm not sure why you invite the press and everybody into this. Like you said, you made a good point this morning. If you're a coach or a boss or a mentor, or, you don't necessarily, if you're going to have a one-on-one discussion and it's going to get a little heated, or you're going to give some feedback or some advice or, things like that. Like, you don't bring your whole employees in and say, hey, by the way, I'm going to get after Dave today. Everybody want to watch?
Right.
You know what I mean?
Yeah. I thought it was a little odd. Again, I don't know if they were caught by surprise by how he was acting and what he said, and then they felt the need to defend it and get a little bit, I don't know if that was the case or if it was planned that they were going to jump all over him like they did, because it seemed like, I've always been of the mindset, hey, praise in public and criticize in private. And, and I feel like, there's times where you shut the door and you let a guy have it, and you both have a chance to go back and forth, but it's kind of odd in a setting when everybody's watching, because we all have our own opinions on, whether we should be funding it, whether it should be a part of this stuff, all that. All these different things, everybody has an opinion, and to see that interaction, I thought it was odd. I thought it was a bad look for Zelensky and Trump. Yeah, frankly, I didn't. But I also, you gotta, if you're, that's Trump's MO is, hey, we're gonna be the big dog, and you're not going to come in here and tell us and act how we did. And when I read a lot of the articles, I didn't watch the whole thing. I saw a clip of it, and And so when I read some of the articles, it seems like that was kind of the consensus, is it was pretty disrespectful. And I don't know if it caught them by surprise and they felt the need the Zelensky was pretty disrespectful, and they felt the need to get defensive.
Right.
But even if that's even a possibility, you have that meeting in private, in my opinion.
I think so too. Yeah.
I don't think that was, I don't necessarily know that was a good look or bad for anybody. I think it was a kind of a bad look all the way around. But see what happens. I'm not a fan of all the funding and everything going over there, anyways. Right. And so I'd love to see it shut down. I'd love to see peace come to the all these wars stop. I'm tired of it, and I'm tired of us being involved in it, frankly. Right. And so I haven't really paid a close enough attention to give a educated opinion on all that outside of just the outside look at anything. And I thought that was kind of a bad look.
Yeah, I agree. Yeah. New CNN article says housing market is shifting better for buyers. What do you think about that?
Yeah.
Did you have a chance to?
Well, I think they're seeing a slight uptick in inventory in a lot of markets. Prices are kind of stabilizing, and they feel like because there's an uptick in inventory, buyers are able to ask for more concessions, make offers, negotiate offers. Right. And so I think that, while it's, the headline, you have to read the articles. The headlines are always that it's shifting in favor of buyers. When you actually read the article, there's three major challenges for buyers: really high interest rates, really high prices, and really low inventory. That's been the case for a long time. And so when you read the article, we still have high interest rates. We still have low inventory, but the inventory is getting better. So they're getting a few more houses come on the market. But we went from like 3 months of inventory to like 3.7 months on average in a lot of markets that they were talking about. And then ultimately prices are not coming down, but buyers or sellers are a little bit more negotiable. And so you're able to negotiate. You're not competing. They're sitting on the market a little bit longer. Houses are expiring at times because they were asking for too much. And so they're not just flying off the shelves. So there are indicators that it's, the buyers are, that there's some relief at least, but it's not, it doesn't appear to be an overnight relief on all three of those major issues.
Well, and I think too, it's important that certain cities, certain areas are different than other areas. So there's some markets that are super crazy, some markets that aren't. So that also plays a big role in it, from a housing perspective.
Yeah, and always, and you have to understand those markets that are more volatile. Florida is a major market. Right. That Florida in general is a lot more volatile. They have big upswings and they have major downswings. And so when you see a list of the markets that are starting to trend downward, a lot of them are going to be in those markets that are typically highly volatile type markets overall, right? There's some markets like we're in Utah. We don't get the big swings up or the big swings down. Right. It seems like we get big swings up, right? Because everything's been going up and trending up. But really, you don't have as big a swings as you do in markets like maybe like a Phoenix or some of the Florida markets, and in the Midwest you're going to have a more stabilized type of a market. You're going to have some upswings, downswings, but they're not going to be as big a swings percentage wise as you will find in some of these big markets that are typically more volatile to those bigger swings. And that's where a lot of these articles are based and written about is. And you look at it and read about it, and they're citing, things that are happening in certain Florida cities, and they're like, oh, the housing prices have come down 5%, and every overall appreciation's up 4.5% for 2024. We're starting 2025, and they're saying, okay, it's coming down. Well, certain markets it is, but
certain markets
you have to look. Real estate's really, really regional, and those three major hurdles for buyers are still out there to navigate. But I agree, it does feel like that it doesn't feel like a buyer's or a seller's market, frankly. Yeah. If you're a seller, you're like, doesn't feel like the buyers are that serious. They're trying to negotiate. My house isn't flying off the market, even though there's lower inventory still. And if you're a buyer, you're like, man, prices are still high. Interest rates are still high. It's still hard to find a good property. All of those are true. Two things can be true at one time, and it really feels like kind of a stalemate type of a market to me. And the numbers are indicating that as well.
Good. Okay. All right, got a couple questions.
Okay.
I haven't read this one, so we'll just dive right in. But we have a HELOC to help with down payments on $1 million up to $1 million in a property. Of course, we'd like to own multiple properties as soon as possible, and we're trying to keep costs down. However, this limits the ability to great homes significantly. We tend to overthink everything and have learned to consider the advice of those who have experience in whatever it is we're trying to do. we want to make prudent decisions with our finances. Are we right to keep looking for a less expensive place, or should we go for it and be willing to spend a bit more on our first property?
Yeah, good question. So you're weighing the option of saying, hey, listen, we're trying to use our available capital, and that's putting us in a certain price point.
Right.
And they're saying we have the availability to tap into a HELOC, which allows us to go buy much more expensive properties. So essentially saying, okay, what should I continue to look at the less expensive properties, or should we go all in, tap into some HELOC money and go, try to buy a better property? And that all depends, right? That's a hard question to answer. I am always going to lean toward, because if you use a HELOCs are really powerful tools in your wealth building journey. They can also be very powerful tools to get you in trouble really, really quickly as well. And so you have to be very, very disciplined and diligent about when and how you're going to use HELOC money, in my opinion. One of the things I can't stand online is watching all of these so-called gurus out there showing these strategies that on paper look amazing. They and they work beautifully as long as everything's going right. But when something happens and goes wrong, all of a sudden you put your back against the wall and you're bankrupt overnight because you took too big of swings and you leveraged too much. And the Burr method is a perfect example of this. I saw somebody posting saying, hey, listen, I just went and bought this $1 million property. We went in and we refurnished it and we did this stuff. And then it appraised for $2.8 million and we pulled out 2.5 tax-free, and we have $1 million to play with. And we they're showing new boats and all this stuff. And then they go buy another property and they do it again. What happens is, I remember back in 2008, I was investing in 2008. Many of these people, and I can tell that they weren't doing it because they're 30 years old showing these processes, and they didn't see a market shift on the other side of it. And so I'm going to always lean toward being way more conservative. Not that those strategies don't work, not that tapping into your HELOC can't work, and where you can buy a more quality property, maybe in a quality area. I would rather see you find a quality area and quality properties in a more affordable range and then use that HELOC for some other things. Now, that being said, what if I've got $1 million of HELOC money and I'm going to tap into 250 of it, and I'm not really over leveraging the property that I'm taking the money out of, and I'm still using some of that equity, but not over levering that property. But what you're doing is now over levering the new property, because you're using borrowed money for down payment, borrowed money for the base loan, the first mortgage, and you're using some borrowed money probably from your HELOC to fix it up. And so you now have an asset that's 100% financed, and before you know it, you can get in trouble really, really quickly. It works great if everything's going forward and everything's going up, and you never get caught with your pants down. If things shift and markets go backwards, which I have been through 2 major market corrections personally, and I know what it feels like to have your back against the wall and have things over leveraged. And so now I grow a lot slower but a lot more conservative, so that if things shift downwards, I'm still going to be fine. These assets are still going to be fine. They're still going to produce. Sure, I didn't make the big home runs like the guy that's online posting about the $2 million properties that he was able to buy and then refinance them and pull a couple $1 million out and live off that money tax-free. But I also would have those same properties. Maybe I didn't buy them within a year of each other. Maybe it took me 3 years to buy them because I had to save up for my down payments. But he's going to owe on $6 million of property, he's going to owe $5.5 million based on his scenario he showed. I don't know how you can pull that much out, but the scenario, I'm literally thinking of a scenario that was posted online, and in that situation, and then he puts $2 million tax free in his pocket. Those are strategies real estate coaches talk about all the time. I might do the same thing, but I'm going to owe $2.5 million on $6 million of property. And if the market shifts down, I'm going to still be in a really good position because neither of those properties are over leveraged. It took me longer to do it because I had to wait to save up the money for the down payment and do all that stuff. And I didn't tap into equity in other properties. Now, I'm not saying I've never done it. I'm not saying that we don't have members that do it. I'm saying if you're going to do it, you have to be very, very diligent about it. And so the simple answer to the question is, if I just had to give one answer, I would say I would try to find a way to find the quality property that without tapping into borrowed money and 100% financing my new acquisition. Right.
No, that's good. I think that's good advice. I mean, we look at it a little bit more conservative and don't over leverage yourself. I had a conversation this last week with that same thing, and the gal said, "I'm so thankful that you said that because I felt like I was not doing the right thing by not going and doing all these refis and all this stuff.
You're made to think that you're not aggressive and you don't want to win and you're not willing to roll up your sleeves and take the chances. Like we all have to take chances. There's risk in everything. Buying that first property that's not over leveraged is still a chance. Yeah. That's still a risk, right? Yeah. You're just taking I've walked into a buzzsaw before. It hurts. Yeah. And I don't want to walk into another one. And so I try to avoid those. And sometimes that path that the buzzsaw is on is a faster path. It's a shortcut. But I have to make sure that I get there and navigate through it while it's not turned on, because if it turns on, I'm hurt and I'm not moving forward anymore.
Yeah. Okay. Last question. I think this is from John from Sarasota. He's talking about updating your home. So he said, I saw one of your members, and this came in on our support email. I saw one of your members updated their listing 3 months after posting it. They added some stuff, some amenities, some things like that. So the question is, are you shooting yourself in the foot if you don't wait and then just post the finished product, or is it better to update the amenities and things as time goes by? So it's one of those things like, do we get it perfect and ready and everything all set up with all the amenities, all the extras, everything so that it is absolutely ready to go from day one? Or do we try to launch it, get it going, and then as we go down the road, 3 to 6 months, can we add things and update it as we go?
The perfect scenario is get it perfect before you launch it.
Yeah.
And if you're going to be able to get it perfect within a 3-month period, I would rather see you wait and get it perfect, because the mortgage payments you're making during those 3 months and the holding costs are probably going to be less than the money that you leave on the table, and because you're going to, one, leave some money on the table. Two, it's going to be very hard to get that momentum back, and it takes a while, right? Because what you did by launching a subpar property that kind of blended into the crowd is you are getting judged by the OTAs, by the algorithms, the minute you post a property. And they are judging you to see, do our customers like your product and are they going to convert? Are you able to attract our customers, convert them into bookings so that we make money? And then are you able to deliver a great experience that are 5 stars so we don't have to worry about it? I don't want to deal with my customer service team dealing with you as a host. So you're getting judged right out of the gate. You're getting judged really, really heavily in the very beginning. And you get a couple weeks of judgment. And then they decide, okay, this is a really good property and we're going to rank it high and we're going to give them exposure, and they're doing their job, right? We're making money with them. They're good hosts. They're delivering a great experience. And or are you getting judged that you're just mediocre and you're going to get, you're just going to kind of get pushed into the crowd with everybody else, and you're going to just blend in. It's going to be hard to get extra exposure. You're just going to kind of bounce around and tread water. And or if you actually have like a bad review because you weren't set up quite right and you weren't able to deliver a good experience, that you get tagged as not a good host, right? Okay, this doesn't get booked, and it actually, when it did get booked, it got a bad review. We're really gonna put this one on the back shelf, right? And so that's what the OTAs essentially are doing, and they're judging you when you launch a property that's not ready. You are going to accept the judgment of how that came out. You never get a second chance to make a first impression, and that's very, very true on the OTAs. If you decide to do that and you're like, hey, listen, it's going to be 6 months, 8 months, 9 months, whatever it is, and we really need to get it on the market and we need to get some business while we're waiting for, certain things to show up before we can do a final photo shoot. You just have to know that trying to kind of reestablish your reputation is a lot harder after you've been judged and kind of have a certain, you have a certain reputation now with the OTAs. Trying to elevate that reputation is just more difficult. And so it can absolutely be done. People do it all the time. We buy properties all the time. And we have people come and join Vodacy all the time. There's processes that you will do. It's just, if you have to choose one or the other, I would choose launching my property when it's ready versus launching it when it's not ready. But you're really, 3 months is a time frame that you really start thinking about. If I'm not going to be ready for another 3 months and I can make some money, that's a hard decision, because that's 3 months is a long time,
right?
That you're maybe waiting for furniture, waiting for something. And you're like, I really could use some revenue right now. Maybe you're during the peak season and you can get some bookings coming in. But it's harder to elevate that reputation once you've been judged than it is to come out with the benefit of the doubt and then let the market decide, hey, listen, this is a really good property. We love this property. And then the OTAs will say, hey, listen, we're gonna put them in this bucket of really good people with extra exposure, and you continue that for the long term.
Yeah, good. Okay. Well, that's it, buddy. Good episode today, man.
All right. Okay, guys, that was good. I like questions. Keep those questions coming in. It's fun to talk about you get those questions answered. Lots of details in, sometimes what feels like a simple question. So I appreciate you letting me go off for a little bit of a, long-winded answers once in a while, because that's what I do here. And so we will wrap it up today. As always, we appreciate your time and spending it with us. And, I know how valuable that is. And so if you have somebody else that would like this show, share it. If you think that somebody else would like to be a part of these conversations, share the show. We don't run ads or sponsorships. The only way it grows is through you guys. So if you have more than 30 seconds, give us a thumbs up and a review on whatever platform you're watching or listening on. And the final, most important thing that I ask you at the end of every episode is pick that one thing you can do today to start building that life you don't want to take a vacation from. Cheers, my friends. Cheers, buddy.
Cheers, buddy.
Thanks for joining us on this episode of the Vacation Rental Revolution podcast. Share this with other people you think need to hear about it. And don't forget to subscribe and leave us a review. Hey Grace, is there a website? Yes! For more amazing content and expert advice, visit Vodacy.com. Thanks for listening, and we'll see you on the next episode.